All right, what up, team? Welcome back to the High Performance Trader. I am your host, Joshua Salvetti, and today we are going to be breaking down some charts. We're going to be breaking down some charts. Bear with me. Let me pull up Thinkorswim here, and we're going to dive into this crazy price action that we had today. Before I go any further, we are going to be going live tomorrow on November 21st. Okay, so once again, November 21st, we are going to be going live, and we're going to be executing live on the charts. And the purpose of today's lesson or today's video is I just kind of want to break down how I've been scalping these markets. Okay, these markets, these current markets have been insanely volatile. We had FOMC minutes, all those other factors, right? Like when all those other factors start to come into the market, it's up to us to adapt, right? So that's what I really want this to be about, right? How do we actually adapt so that we can execute in the market the way that we're supposed to and not be vulnerable, right? Because at the end of the day, trading's all about remaining focused on the price action and not putting ourselves in vulnerable scenarios. That is what is key, okay? And these markets can make you extremely vulnerable. So I titled this recap, How to Scalp the Market on the 2-minute time frame. This is, I get a lot of questions about the 2-minute time frame. Mostly people either love it or they avoid it altogether. And I used to avoid it altogether myself. And it wasn't necessarily because it was bad. It wasn't necessarily because, it didn't serve me. It's just I didn't really know how to use it correctly, right? The 2-minute time frame, and you guys probably heard me say this before, it's very similar to like a saw, right? Like a sawzall, an automatic saw, table saw. Very sharp, very dangerous, yet extremely effective, okay? So I want to break down the trade that we took today, but more importantly, I want to talk about how to use the 2-minute time frame so that you could take advantage of these markets, right? And you don't find yourself just FOMOing into setups and getting hurt, right? Because that's the overall goal. Now, when I look at this chart right here, I see a day where I used to become extremely vulnerable, right? Just look at how much this thing moved today, right? And before I go any further, I just want to seriously just be so thankful that we actually have a market that we can trade and identify opportunity in, right? Like this is a very big blessing. We have this tool in front of us, this market, and we get to execute on it. But if we don't know what to look for and we don't have confidence in ourselves, in our strategy, in our ability to follow it, we are going to be falling into vulnerable situations, right? Trading, in my opinion, it's like a pinball machine. It's all about staying in the game. You don't have to be the best trader in the world. You just have to be good enough to stay in the game, right? And for the longest time, I think, I know I went through it, but I know a lot of traders go through it. They go through like this boom and bust, right? Where they're like, oh, I'm doing really good. Then boom, I blow it all. I'm doing good. Oh, I blow it all. And it's not that they forget how to trade. It's that they detach themselves from the present moment, right? I call this going full retard, right? Some people get very offended when I use that word. I'm sorry if you get offended. But the purpose of that word, retard, is to help us realize when we're not seeing things clearly, right? It's okay to admit that you're not seeing things clearly. I had yesterday? Yesterday, I was down a couple grand on my account, and I ended up finishing up $100, but I just wasn't seeing things clearly, right? I mean, it's okay to identify the fact that you're just not seeing things clearly. You got to step back. But when you step back in, how should you trade? That's what we're going to be talking about today. So we're trading live tomorrow, so make sure you join us. It's going to be at 9:15 a.m. Eastern. And also, for anybody that wants to join our team and trade with us live every single day, click the link below. I'm currently offering a phenomenal resource for traders. It's called the Profits the Process and Profits Academy. So in this academy, right, you get a year on our Discord, but you also get 4 sessions with me, okay? And in these 4 sessions, we break down the strategy that's changed my life entirely, right? It's a phenomenal program, and it's not necessarily it's like this perfect strategy, but the main reason why most traders fail, in my opinion, is they lack a system, right? So over here at HPT, we created a system for you so that you can execute, right? Because trading is not about being correct, it's about execution, right? It's about understanding, hey, regardless how I feel, I need to be able to pull the trigger when I need to pull the trigger, right? This is the most important thing us as traders can learn to do, right? Is learn how to pull that trigger. So without any further ado, let's talk about how to use the 2-minute time frame, okay? So if I pull up today's price action and I whip out the 2-minute, and I know you guys have been seeing a lot of my content regarding the 2-minute 20, moving averages are, and I say this in every single one of my videos, but moving averages is what keep me present, right? When I'm starting to go full retard and I'm not seeing things clearly, I revert back to my moving average, right? Moving averages are my superpower. There's other superpowers. There's other tools that we can use to get in and out of the market. I'm not saying moving averages are my only superpower, but they keep me from going completely retarded, right? So let's talk about today's trade, and then we'll go a little bit further into the 2-minute. So a trade I took today was a short play, and we entered into the market right here. So going back to our approach, right? Like we have a very simple 3-step approach, and it goes something like this, okay? Critical level, moving average cross, right? This determines the trend. And then RBI or a GBI entry, okay? So right here, that's a green bar ignored. Right here, that's a green bar ignored, okay? Right here, that's a green bar ignored. Any of these candles would have served you well in finding an entry today, okay? Now, it was a little hard, though, especially if you're a futures trader, to really determine your risk, right? Because at the end of the day, that's our job, right? Our job isn't to be right. Our job is to determine our risk, right? It's to identify, hey, this is where I actually want to get into the market. This is what I'm looking for to take advantage of it. How do I actually do it, right? Like, I don't know. Maybe it's just me, but like lately, I've gotten super hyper focused on what I actually need to see to get in a trade. Like, what do I need to see to go, hey, it's time to get in? Today, we weren't getting our 2-minute 20 retests, right? Like, there was no 2-minute 20 retest that was really, in my opinion, anything I wanted to trade. But we were still able to capitalize on this trade right here to the downside at previous day low, okay? So this is where we entered into the market. And I'm going to take this right out of my boy Todd's mind, okay? We entered in short right here at 132, okay? Why did I enter in short? Well, primarily it's because we had a retest of a green bar that was ignored, right? So this box right here is the area of value, right? This is the AOV, okay? Area of value. Price comes back up into it. I mean, look at these. We took a short play right, where was it? Right here. We also took a short play right here, okay? That was it. If I go over to my Discord and I come over into, I think it was ES or was it NQ? Hold on, let me see. Yeah, it's right here. So at 12:34 p.m., I'm hopping in the market short. I'm trading 2 contracts here on ES. Why did I get in this trade? Okay, Josh, it did not touch the 2-minute 20. But you still got in, right? Like I get this question all the time. And it's because let's go back to the criteria required to actually get into a trade. Yes, in a perfect world, you're going to get a 2-minute 20 retest. Yes, in a perfect world, you're going to get an RBI, GBI. But what is it that criteria is actually telling you? It's telling you when you can participate in the market with the odds in your favor and you are not vulnerable to lose a lot of money. That is the primary goal of an edge. Like the primary focus or let me ask you this. How does the edge serve you? Like, how does the edge make you a better trader? It tells you when you can participate and when you are least vulnerable. It tells you when the odds are in your favor and where to get out of the trade if it goes against you, right? That's the purpose of an edge. An edge doesn't just make you rich. An edge gives you the ability to act. Like, this is so important. Hear me out. The edge gives you the awareness to pull the trigger. So the edge actually gives you the application. It gives you the wisdom to say, hey, I'm going to get into the market. I'm going to participate because my edge is present. Now, what happens when your edge doesn't pop up, right? We don't get the 2-minute 20 retest. You have to ask yourself, what is it that my edge does? It tells me when I'm least vulnerable and when the odds are in my favor. It gives me the context. That is the $1 million word, context. Okay. Why was I able to confidently get into this trade without the 2-minute 20, right? You can see here, we hopped in the trade. We ended up making a couple grand on this trade, right? We trimmed one, we trimmed another. Okay, cool. But Josh, how are you actually able to do what it is you're talking about? So once again, I break this down in every single one of my videos. And I'm going to break it down again because this is the strategy that changed my life, right? We're going for a $20,000 a month here on futures this month. And it's literally from trading this strategy. Okay. So what is it I'm doing to understand the context? I'm literally identifying green candles that are disrespected. The bottom here broke. And then I draw a box around the green candle. Okay. That box is this box right here. All right. This is the area of value. So once we get this retest, okay, this is where the context is starting to play a part. I'm starting to go, okay, the market's extremely bearish. But how do I know it's not going to turn around? Okay, look at this. So remember, guys, we entered short right here. Now, once again, my box is here. We enter short right here. And it's literally because we are retesting this area of value. Right? So once again, if I pull up Discord right here, I'm hopping in the market short at 12:34 p.m. Right here, this candle is 12:34 p.m. Right? So literally on this candle, bam. Now, let's bring it back. Right? So we've talked about what an edge does. It gives us context. Now, a lot of beginner traders kind of struggle with this because they're like, wait, Josh, you say don't break character. You say always trade your strategy, right? You say, don't veer from the strategy, or otherwise, we could blow our accounts. I do say that. But once you reach a point in your trading where you realize your edge is there just to give you a good risk reward ratio, right? Like your edge, it's once again, its primary purpose is to get you in the market when the odds are in your favor. Now, the reason why most traders need to stick to their strategy is because they struggle with going full tilt. They struggle with, revenge trading, FOMO, all that stuff. But once you reach a certain point in your trading, I would argue, you get to the point where you're like, hey, the edge is there for what? It's to help me realize the odds are in my favor. So I'm going to pull the trigger, even if I'm not touching the 2-minute 20. Another thing I was able to do today was realized we kept getting close to the 2-minute 20, but we never really touched it. So this helped me multiple times with, once again, identifying the context. We had another one right here too. So the market's all about spotting these patterns, right? Like the patterns give us a better understanding of what we're looking at. It helps us realize, like, if the 2-minute 20 is not being respected all day, don't trade the 2-minute 20. Like, what am I always saying in my videos? If price respects the 20, trade with the 20. If price isn't respecting the 20, don't trade with the 20, right? Like, stay away from it. Another thing I've been doing, once again, is realizing, like, hey, when I'm entering in off the 2-minute and I'm not getting the like entries I want, but I know the market's still selling off, like today, I'll hop in. Like say I want to get in short right here, I'll hop in and I'll just put my stop right here. Right? Like, let's not get so hung up on the fact that we're not getting perfect criteria that we dismiss the whole day and miss the whole move, right? It doesn't seem right to me. It doesn't seem right. And I don't know, maybe it is. It's a good argument. But like, if the market's selling off, opportunities present, it's hard to participate because we're not getting a 2-minute 20 retest. Do we shut off our computer? Or do we go, hey, you know what? Like, I'm pretty confident that sellers are in control. What do I need to see to trade with them? So all in all, that's how I like to trade the 2-minute, right? And just a quick recap so you guys can take away, some valuable information here. Identify the RBI, GBI on the 5-minute time frame. Identify the price coming back up into it and respecting it. Identify the GBI. Okay, like, once again, when you identify an area of value, remember, guys, all that is a GBI. It's your job to figure out who's controlling it. It's our job, me and you. Like, it's our job. My main goal is to figure out who's controlling that AOV. That's all I'm ever looking at. That's it. That's all I'm ever looking at. So when price comes back up into this zone and we can't break the high, and then we get right here, it's kind of hard to see, but this red candle actually disrespected this green candle by a penny. And then look at this green candle. We come up, and then we get that green bar ignored. Boom, right there. You guys see it right there? I'm entering into the market right here. Josh, what do you mean? That's a far away. You're vulnerable there. You're right. But you're always going to be a little vulnerable. At least be like, hey, you know what? I'm a little vulnerable. But I know at least sellers just defended this area of value. I'm getting in. Because I understand the context. Context is everything. If your girl is extremely hungry, right? Say she's being wicked mean to you. You're like, dang, why is she acting like that? And then, 10, 15 minutes later, she goes, you know what, babe, I'm just really hungry. I'm sorry, I'm hangry. You're going to be like, damn, why didn't you just tell me? Like, let's go get some food, right? Like, it happens all the time. Understand how important context is in that situation. If you just understood that your girl was hungry, you could have gotten her some food. Y'all went out. It would have turned out to be a great night. But if you can't read the room, you can't read the context, you're going to be like, dang, this girl's being a bitch. I don't know what her problem is. Now, she's mad, you're mad, kid's mad, dog's mad, and nobody's, you understand what I'm saying? Context is everything. It's our job each and every single day to understand the context of the market. This doesn't mean you need to understand everything. Just the context. How do we understand the context? RBI, GBI. Okay. Maybe it's when sellers owned open print this morning. I can't believe it. I did not. I definitely could have done a lot better today. I could have capitalized on this a little bit more. This thing was selling off. Crazy. But the biggest takeaway, Josh, how can we get, like, because I was scalping a lot of these to the downside. Josh, what were you doing? How do you do it? So when we cross over, okay, let's go back one more time to the context here. We have our key levels, right? We got open print, we got 67571. Initially, I was watching this RBI right here. I was like, this looks bullish. But there's no moving average cross, so I really wasn't ready to long this. And then, bam, that happens, right? Sellers start to come in strong. So initially, I got my 2-minute time frame out, and I'm looking for a retest up here, right? I really want a retest in this level, right? Price maybe comes up and then comes down, right? Like that's what I really wanted. But the market isn't going to give you what you want. But I understand the context because sellers just closed below open print. We have a moving average cross, and we just rejected a key level. What's this telling me? And as my boy Todd would say, this one candle wiped out all this to the left of it, right? So once again, sellers are showing a lot of strength. We're getting a lot of selling that's coming into the market. I'm not getting anything off the 20. But Josh, you still entered in. You still made some money. How? Because when I understand, hey, sellers are in control, I'll drop down to that 2-minute, sometimes even the 1-minute or the 30-second chart, and I'll find a 2-minute 20 retest there or a 20 EMA retest there. Or I'll hop in on the 2-minute and I'll put my stop right above the candle I'm getting in. Because you'll notice something here, guys. If you hopped in right here and you always put your stop above the previous candle, look what happens. Hop in right here, stop above the previous candle. Okay, sells off. Look at this. Stop above the previous candle. 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 Okay? I just changed your life. Do you guys understand how effective this is? If and when you are in a short play, or you want to get in a short, put your stop above the previous candle. Always. And when the trend's healthy, it's just going to continue. All right, guys, I'm exhausted. I just want to do a quick recap. But the biggest thing, we're trading live tomorrow. We're gonna kill it. Like we're gonna have a really good day. My confidence is, I'm feeling really good right now. The futures have been going really good. I'm taking kind of a lot of setups, but it's because the opportunity is presenting itself. Okay, don't be afraid to take a lot of setups as long as they're valid and an off moving average. Always know where you want to stop out of your trade. Always. And don't be afraid to try something new. And don't, as long as you're not vulnerable, you're in a good situation, right? If you want to get in the chart, but it's going too quick, hop in and put your stop above the 2-minute 20 or the previous 2-minute bar. We're trading live tomorrow. I love you guys. 9:15. Check out the links below. Anybody that wants to get involved and work with me and be on our team, check it out. Phenomenal team. And there's going to be some changes coming up here in a minute, but it's all good. So take advantage of it. Don't take advantage of it. It doesn't matter. I love you though, guys, and I'll see you guys tomorrow. Peace. Todd, we're going to kill it tomorrow, bro. We are going to kill it. We're going to kill it. I love you guys. 9:15 a.m. Eastern. Let's go.